Alright, what's up, guys? Here we are back again. Another Friday in the books, another week down. Friday, November 4th, coming at you with another weekly wrap up with the trading experts. Let's get right into it. We had a real interesting week this week. We opened up with a tiny little gap up this day right here I'm pointing to. Well, actually, let's talk about the end of last week. You guys didn't really hear my video. Lost connection. Apologize for that. But we're back. We're back now. So last week, Monday, Tuesday, here's Wednesday. We got a little pivot, and then we gapped up huge and sold off. And this day right here was just the biggest key indicator. It was like, take all your risk off, because every single time we gap up, it just sold off. Late this day, boom, gap up, sold off. Gap up, sold off. So that is just a sign of an unhealthy market. So we're very weary of this market coming into this week. So what happens is this week we gap up, have a tight consolidation inside day after a wide range Friday. I mean, it makes sense. We're just trying to consolidate the move. Monday after the close is when all that brand new Hillary information came out about the new emails, Anthony Weiner, yada, yada, yada. Trump started surging in the polls. The general consensus is that a Trump presidency would be very bad for the market. So once it became a neck and neck kind of race this last week, we experienced a hard sell-off Tuesday. Great recovery, but then we saw further downside action. Yesterday, people were thinking maybe we bounce. We get that bounce day, we spring forward. Today, same thing. And we had a really interesting day today. Let's go to the 5 minute. Here's today. This whole bottom right here. We pushed through, took out yesterday's lows, and then ripped higher. So that is an immediate reversal sign. Immediate reversal sign when you take out the lows and then rip higher. So we're all thinking, okay, maybe market might be trying to consolidate, maybe trying to recover from that huge down move. And then at the end of the day, out of nowhere, we just sold off right back at lows. And it was very interesting to see because it was very, very unexpected. Now we have a momentum hammer to the downside, and it looks like we're just going further. Now, what was very interesting about this sell-off is all the sell-offs previously. Look at these sharp gap down, huge move lower. These are just like huge gaps, huge wide range bars. Look at these huge wide range bars. These are the past sell-offs. But we go to this one, even the Brexit, it was 2 vicious days. We go to this one, it's kind of just a gradual move lower. I mean, let's look at the hourly chart. It's just been a constant, steady sell-off. Now, people are saying it could be because of the election. People want to take risk off. I mean, elections are usually bad for the market in general. They definitely need some time, especially with Trump surging in the polls. It's definitely changed a few things. Now let's get into some charts that kind of showcase the unhealthy market that we've been in. Let's start with Boeing. Boeing had this huge earnings move. Go to the weekly chart. Look at this beautiful level right here, this 136, 137 level. Rips higher. This one day it was up like $10. And then since then, we were looking to get involved possibly around this area when it was consolidating. It was getting very tight. I'll show you on the hourly. It was consolidating, getting very tight, gapped up a bit, went to push higher, immediately sold off. And then since then, it's just been a dog. And earnings moves like this, you don't see that in a healthy market. Another example, PayPal gaps up. Look at the weekly chart. Look at this. Takes out all-time highs, rips through them. It looks like it's going to be the momentum play of the quarter going forward, and just completely erase it, fills the gap. Another great one with earnings. Google shoots to all-time highs this day. What, did it take it out by a cent or so? And since then, it just sold off so hard. Now it did catch a bid today finally, but I mean, it's off. It was off what, $80, $70 off its highs. Pretty substantial. A few more. Apple. Well, let's get rid of these. You ain't wedging anymore, girl. All right, so here's earnings day, and they pushed lower, closed higher. It looks like they were going to get the recovery, and boom, dead. So everything's sold off. Oh, last but not least, Tesla. Here's earnings day, closed around this area, the 200 area, gaps up $10, tries to push higher and just gets rejected by those moving averages. Now, did it try to consolidate around previous days' prices? Nope, it just ripped lower and lower and lower and lower. So these are definitely signs of an unhealthy market. Be very wary. There's not really a swing trading environment unless you're doing it to the downside. We tend to swing more, so we've been scalping. The two trades we called out to you guys this week were awesome, absolutely awesome. This HT was the trade of the week. We had a short bias coming into the week after the way the market closed. So we saw this terrible earnings reaction. They actually had a decent earnings number, but I don't think they had great guidance going forward. So this is a purely technical play, though. We saw this huge support around 1780. Terrible reaction to earnings. Puts in this tight little inside day right at support, allowing us to just hammer it through lows. And you could see. I mean, this isn't a textbook version of it, but here's a shoulder, here's a head, and this little shoulder over here, and then it takes out lows on higher volume. That's textbook head and shoulders. But I mean, it's a little sloppy of a chart. Regardless, awesome trade. Here's our stop right here, 1812. What is his high? 1814. So we had an 1850 stop. Trigger was 1780. It was at 35 cents risk. And here we are. It's a buck lower. So right there, it's over 5-to-1 risk reward right there. Absolutely great trade. I heard a bunch of our members are in it. Good stuff. Love hearing that. Love hearing you guys take advantage. Another one. I mean, I personally fucking crushed this one. Win short. So this is an awesome trade. I mean, a lot of people are looking at this. You look at the weekly chart. Here's what we're looking at. This huge macro support right here. And this should get some continuation of the downside. It's very weak. I wouldn't be surprised to see it, in the low 80s very soon. But we got involved right here. I actually covered it all on this day. It was just a nice move, and I don't really want to be holding any positions in this type of market. But this win gave us an absolutely great trade. Very happy to see this. Something that was very interesting to see today was IBB finally getting the biotechs, finally getting some love. Now it could be a little double bottom right here, which is a change of trend. But generally, the consensus with biotechs and the election is that if Hillary gets elected, she's going to be coming at the biotech industry all about the regulation pricing on drugs, while Trump would have it be a competitive market. So if Trump gets elected, you could expect the biotechs to get back in play. And if Hillary does, you could expect them to get pretty whacked again. Me personally, I would love to see the biotechs back in play. They're my favorite sector to trade. They just give such great momentum moves higher. They rip through dollars and dollars, so you don't need a ton of stock. You can make some good money. And if you catch them right on tight risk, there's no better trades in my eyes. So that's what I love about the biotechs. But going forward, let's get back to the SPY S&P. We're in kind of no man's land right now. I mean, this is the 200-day right here, 208. Where we at? 208 quarter-ish, and we closed right on it. So I mean, if we take out the 200-day, you can look. Here's the purple line. We were below it through the end of last year, and most of this year, but we reclaimed it. And you always want to see yourself on top of the 200-day moving average in order to consider yourself a healthy chart. So if this takes it out to the downside, we could be in for some trouble. But right now it's too tough to say, and the market is highly news driven at this point in time with the election. Everything revolves around the election. I'm sick of it. You're sick of it. We're all sick of it. But that's the reality of the situation. So post Tuesday, it's going to be very interesting to see what happens. Right now, we're considering this a very risk-off environment. We don't have a ton of trades. We're mostly day trading. We're not swing trading. So I mean that's really our take on the market right now. It was very interesting that it was a gradual sell-off and not a panic sell-off like you often see. So I would be very surprised to see a V bottom. You mostly see V bottoms on panic sell-offs. Get some dumb money out, and then all the smart money is just buying down here and rips it higher. So I wouldn't expect to see a V like that. and I definitely don't want to see a bear market. Everyone's like, oh, we've been in this bull market 6 years, 7 years, whatever it is. I can't wait till we get in a bear market. Bear markets are very, very difficult to trade. They're known for their brutal, absolutely brutal bounces if you're short. So let's say you're short, you're riding the trends. It'll just rip up in your face, short covering, as well as momentum buying. You'll give all your money back. And it's just super, super choppy. There's way less clean moves. It's just a more difficult trading environment, especially the way we trade. But we'll take it as it comes. We're going to take it as we see it. We'll keep you guys updated with market levels and updates throughout the week. The election is going to be very interesting. It's going to set the precedent for the rest of the year going forward. What I personally think will happen is Tuesday, regardless of who gets elected, we're going to have a little rinse out. We'll probably push lower a bit, but I think we'll get some good trading into year end. Especially the biotechs, man. These are all very, like, let's look at weekly where these came from. People were loving the biotechs mid 2015. Yeah, they were at $400. Now it's like they're dead. But I mean, look at this run they went on. All right, let's not think about this. Let's look at where they're at. Holy mackerel! These things just went on a run. So now they got corrected a bit. So once they're back in play, that'll be some good trading. But what I was saying is, so I'm planning on a little more downside ahead. I would expect us to reverse at some point, but we're gonna react. We're not gonna guess what's gonna happen and force our will upon the market. We're gonna react to what the market tells us. As you guys saw this week, I mean, the 2 trades we sent out as alerts with 2 shorts. They both worked beautifully. So we expected the downside in the market, but going forward, yeah, we're just patiently waiting and seeing. Very surprised to see these last 2 hours of the day close so weak. Really thought we were going to hold up. So right now, no man's land. Not a ton to do in the market. All the traders we're talking to don't have a ton of risk on. Actually, most are all cash and flat and just kind of waiting for the election. It seems like everyone's waiting for the election. So that's what we're watching going forward. All right, we'll keep you guys posted throughout the rest of the week, and Sunday night we'll have a trade for you. But we'll definitely keep you posted after the election. There's going to be some wild market action. Has been a new president in 8 years, so a lot's going to change. But yeah, keep it locked. Keep you guys coming with the charts and the videos and the picks and everything. All right, have a good weekend. Happy trading.